In this video, traders, we're going to look at 4 continuation patterns I think you should know if you are a new trader. Stay tuned. Hey traders, a very warm welcome to you. Thank you for joining me. Okay, so if you're a brand new trader, this is the kind of stuff it's well worth learning. 4 continuation patterns, chart patterns you should know. What I mean by continuation as opposed to reversal, 2 kind of different definitions. Reversal is when market is pushing up and is going to turn away, or pushing down and is going to turn away, looking for some sort of clue the market might do that. And a continuation pattern is something where we'll form a pattern, the market's pushing up, it will form a pattern to suggest that there will be a continuation in price and it will continue moving up, or vice versa, it's moving down. You'll see one of these patterns that may suggest that it will continue moving lower, and so you can place a short trade. All right, so 4 of the top ones I think you should know if you are a new trader, and even if you're not a new trader. These form the foundation really of a lot of good trading setups. Okay, a rectangle. A rectangle is really a broad kind of move where you've had a nice push higher. In this instance, you have, where's my purple pen? In my pocket. Perfect. You have this scenario here where the price forms a rectangle, and the strategy here is to buy a break of that rectangle to the high side. It's basically the market's pushed up, it's accepted this new level of price. This will be quite wide, and we'll show the difference in a minute between the flag, which is very similar in pattern, but there's a lot of difference in width, i.e. high to low. This could be over, if we're talking about a daily chart, this could be kind of, 2 days of low, 2 days of high, 2 days of upside, 2 days downside, that kind of thing, that kind of broad rectangle range, and then you're looking for a further break to the high side. The point here is it's an acceptance of price at a new level after the price has moved up, or if you're going to flip on its head, after the price has moved down. When we see that acceptance, we see that when bulls are ready to push the trigger and push the throttle down again and get going and do some more buying, on bears are going to step back. Then we see that break, we're looking to buy and push it up to new highs. Pretty good one, but it takes quite a long time to form this one. A rectangle is something that takes a while to do, but it stands out on a chart, which is quite easy to spot. Nice one to put in your setups. Okay, wedges. Wedge is a little bit more different. A wedge is when we have a kind of push up and then we have price kind of doing this, where, this is almost like, a high to low divergence, if that makes sense. So price starts to converge into a narrow point, different from a triangle, which we'll look at in a second, because this is a quite high tight move and slightly different from a flag as well. The point is here, we've driven up, we're now forming higher lows, we're forming lower highs, higher lows, and eventually we get to some of a pinnacle of the wedge, and at some point we're gonna have to break out. And the theory being, again, is that this price has been accepted. Bears aren't able to push this lower. Generally speaking, actually, you'll probably find that this may well be horizontal, this line, this lower line here. So maybe not lower lows, more than likely horizontal, but the point is the lower highs. The bulls aren't quite aggressive enough to push it higher. It's pushing down, but there's still a lot of support there, which causes that to break through. And there is your long as it breaks through that kind of down channel of the wedge. And if we were to zoom in on this, this is the area you're going long. So this kind of area here, as it breaks out through there, that's your long entry for the wedge trade. Quite a nice little powerful chart pattern, that one. Keep an eye off that. Good on a daily chart and good on kind of a 4 hourly, that kind of thing. All right, let's go again. So this one's a flag, one of my very, very, very favorite patterns. I absolutely love trading flags under the right conditions. A flag is basically, as it says, you have a rectangle, so a little bit different from the wedge. You have a rectangle of price that's formed after you have a drive up in price. And by the way, we're just flipping these on its heads for the bear side. I'm just using the bull side as an example here for the longs. You've got your flag pole here, and we talked about these before. This is your flag here. Okay, the important thing about a flag is it's rectangular, so it's almost like these are both horizontal and parallel to each other. And you trade this by trading a breakout of the flag to the upside here. There's your long entry, and you're looking for a drive higher. Now, Good thing about flags, or something to look for flags, is that the higher the flag, i.e. the shallower right, if you want a flag right at highs, obviously you can have flags kind of here. They're not as good. You want flags right at the top of the move, and you also want them as tight as possible. So the width between the high and the low as tight as possible. So the narrower that is, the more acceptance it is at an extreme, and the more likely that thing's just going to blow its top and carry on moving very, very aggressively. So they're really nice patterns to watch for, guys. I think you can become a decent trader just by trading flags. That's how much I think they are good. You have to, kind of drill out some of the NAF flag setups, because they don't always work in the wrong conditions, but under the right conditions, you've got a good filtering process. Flags are extremely powerful. So if you're a brand new trader and you like trading continuation, my suggestion is to just look for flags. Try that out and see how you get on. And if you do that, stick a comment in the comment section below. Let me know how you get on with that. Triangle, similar kind of thing, but we're broader. So we're pushing down here, and price is kind of doing this, it's coming to a point. It's a much wider pattern than the wedge. The wedge is kind of a flag and a triangle combination. Again, we're coming to a point. This is over multiple days. You're going to have big moves back, and volatility just starts to dry off. The volume just starts to dry off. This could be symmetrical triangle. It could be angled in like this. I've perhaps drawn this less. We should maybe have more of an angle on this if we're being correct. But again, real world stuff, it doesn't always happen like this. The idea with this one, guys, is that, price is pushing lower, 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 and eventually it just becomes too much and it cracks through the lows, and there's the short entry here. Okay, that's the triangle trade. Pretty decent, but again, it takes a long kind of time sometimes for it to position. Nice pattern for a daily chart. Let's kind of segment these. This is my preferred on a daily. This is my preferred on a daily. These are better intraday in my experience. So whether you're looking at an hourly chart, 4-hourly chart, even a 5-minute chart, a flag on a 5-minute chart on an extra aggressive move off the open is a very nice trade indeed. All right, guys, for continuation patterns that I think you should know if you're a new trader. Take care. See you in the next one. Bye-bye.